Well, Radico Khaitan is catching everyone's attention. In the last couple of years, it's taken a few positive steps. It's focused on premiumization. It's cut down its debt. And now we have Goldman Sachs too initiating coverage on this Alco Bev major with a buy and a target at 1,144 rupees per share. Now, there are three reasons they outline as to what's really making them so positive around Radico Khaitan. Firstly, the continued market share momentum. Now, Radico Khaitan is already a leader in the vodka segment in India. They have a 45% volume and value market share, and now they are emerging as a competitor in the whiskey, brandy, rum and gin segment as well. In fact, they say that in the P&A segment, Radico has won 120 basis points market share in the category between FY21 and FY24 thanks to the new launches. The second point is the EBITDA margins, which they note have been expanding significantly, and that's on account of a better P&A mix. So where in FY21 the P&A mix contributed around 29%, in FY25 they expect this P&A mix to contribute around 35%. Adding to that, the benefit of course operating leverage as well, which will be seen kicking in, that is something that will contribute to the EBITDA margins as well. So their FY23 and 24 EBITDA estimates are actually 6 and 9% above estimates. The gross margins as well were seen expanding to 51% in FY25 compared to 50.3% in FY21, largely due to the improving mix. They do not assume any reduction further in A&P expenses because Radico is investing behind its brands, especially because they have a slew of new launches planned in the next 12 odd months. And finally, they speak about the risk reward ratio. They note at the attractiveness of the stock price, it's trading much lower than its peers. It's at just 28.5 times the FY23 PE. So it's at a discount compared to, United Spirits. And they are forecasting an EPS CAGR over the next 4 years of 18% for Radico Khaitan. So that's something that, they make note of, that the risk reward ratio is very attractive. Let's not forget that Radico has also steadily cut down its net debt by improving operating cash flows, focusing on its prestige and above segment, lowering the working capital needs, paring down or cutting down non-profitable brands as well. So this in turn has allowed Radico Khaitan to improve its cash generation and cut down its debt as well. So where in FY16 the debt was 950 crores, now it's at just about 184 crores as on the end of Q1 FY22. The net debt to equity ratio as well has come down to 0.18 times versus 0.97 times in FY16. This in turn is leading to steady increase in free cash flow, which in turn will be available for Radico to invest in their new brands and of course for shareholder payouts.